Okay, welcome everyone. I hope you can hear me well. I don't have my typical microphone with me because I am at the office and I left my microphone at home in the morning and I had no time to go home in the meantime. So I hope the audio is still okay and I hope you can hear me well. If not, then I need to change some of the setup, but I don't really know how to, so you don't have much options actually. Welcome to today's Twitter space that we're doing on a weekly basis here at Cake DeFi. It's normally myself co-hosting together with Fabio, who's leading all of community. And yeah, we're doing this on a weekly basis. We try to answer your questions around the crypto markets as a whole, and obviously what's happening at Cake DeFi. The couple of points we want to discuss today, it's centered all around the same thing. It's centered around the crypto pump that you have probably been noticing over the past 24 hours. Bitcoin is over 42,000, Ethereum cracked the 3,000 again, and DFI is close to cracking $4, and maybe it cracked $4 already. I didn't check the price over the last 15 minutes. So yeah, you straight away see euphoria in the various groups on Twitter. I am gonna be, as always, a bit of the more cautious voice. I assume, I don't know yet, Fabio is gonna be on Permabull, very exciting. So we're going to discuss that a bit, discuss a bit of the reasons, discuss a bit of the background, and yes, we have one or two quite cool announcements to make for the company that we're going to do at the end. You're going to love those. So yeah, with that, I think we're going to dive right in. Yeah, Fabio, why don't you start what you see on social? How is the sentiment? Are we like at 100,000 already? What's happening?
Yeah, of course we are pumping. Everything is bullish. I'm super happy. You can also feel it on social media in the community. Everybody's happy when prices go up, and we 10 minutes or 15 minutes ahead of this Twitter space, Julian asked me, hey, Fabio, what are we going to talk about? And of course, I have a very different way of interpreting the news and reading through social media than Julian does. He's more of a you have more a skeptical approach. And I'm very pumpy and hypey if I read something. So I think that one of the first points that we brought up was I was 100% sure I saw a post on the Financial Times that states that Bitcoin El Salvador, Bitcoin and volcano bonds are massively oversubscribed. They asked for $1 billion, and I think the Financial Times reported they got $1.5 billion. And some people on Twitter even claimed they got $2 billion in their bond, so massively oversubscribed. But the first thing Julian, of course, told me, do you have a valid source for that? And we kind of only found one article where it's mentioned as a quote from some minister or something. So yeah, I guess maybe Julian, you can do a little bit of the skeptic side.
No, it was because this morning I actually saw the article on Cointelegraph, and then I think CoinDesk had the same article, which was like that the Bitcoin bond of El Salvador is getting delayed, and so I was like, oh, okay, it's getting delayed. So I didn't see that like euphoric stuff that Fabio shared, and so like Fabio then tells me, oh, we should definitely talk about the Bitcoin bond, and I'm like that it's getting delayed or what? And he's like, no, it's totally oversubscribed. So I was like, huh? That's so weird because I just read the article this morning that it was getting delayed. So yeah, so then I told Fabio on Slack, I said, okay, you shared a $2 billion, and I'm gonna be the cautious voice, the skeptical voice here, because I this morning just read that article about it being delayed. So I think I think you may be right. Maybe it's actually both, right? Maybe it is actually oversubscribed, but at the same time, it may actually be delayed. Yeah.
I guess I'm a very simple guy when it comes to these things. I read a headline, I read a quote, and then in my mind it's just bling bling, nation state adoption, it's happening, let's go.
A simple guy. I see it, I like it, I share it. Okay, but let's get to some serious stuff. So where's this pump coming from? What do you hear on on the street? Let's say it on the street. Where is this pump coming from?
Yeah, the funny story before I go into the juicy details. Julian gives me about 5 minutes a week to update the whole team in a team meeting where I can do a presentation and share a little bit what's going on in the community and how we're progressing and things like that. So I took the liberty of restructuring my presentation in a certain way and dealing a little bit of hopium in the end of the presentation. So
that was yesterday.
Yeah, it was yesterday. Yeah, so I took some charts. Of course, I go to the big guys. I go to Woonomics, Willy Woo. I go to Plan B, and I take out these long-term logarithmic charts that all lead to 6-figure or 7-figure numbers, and with some nice blockchain indicators that tell that the bottom is in, and that we're finally can move higher. And I shared a few charts that could be interesting. Like one of them is you can find it on Willy Woo's personal Twitter, and he shared a chart to identify a bottom that's only this indicator only triggers like once every few years. And it's triggered a month or so ago when we were at the higher 30s. Or the lower 30s, sorry. And Plan B came out with this chart, and he said, hey, stock to flow could still be valid if this scenario, if we would pump to like 200K and stay above 100K for the next 2 years, then stock to flow would still be valid. And so I guess there is sort of a little bit this bullish perception, this bullish sentiment coming back now that the people are not scared of the Fed meeting that is coming up, and the markets were not reacting in a big way. So I guess everything was priced in. So there is some optimism returning to the market. Maybe that's the reason for crypto to pump, because general markets are kind of sideways, at least for now. And Bitcoin and crypto in general is moving really strong. Especially, you mentioned it in the beginning, DeFi chain is moving like crazy all year. I think we outperformed Bitcoin by 30% or something year to date. And
so Fabio is in this stand-up, right? And he shills to everyone in the company, guys, all in Bitcoin. Every dollar you don't have in crypto, you're wasting it to inflation. It's gonna get eaten up. Central banks are printing money. Sell all your dollars, all in crypto, right? So that's yesterday. So I'm like the cautious voice. I'm like, okay, listen, people, like crypto is super volatile. Don't gamble your salary on crypto. So I'm like the voice of reason, right? What happens 24 hours later? Everything pumps left and right. I am the person who's like, yeah, lolly loser by telling everyone to be like cautious. And Fabio is like the hero because he's shilling and pumping the entire company with crypto. So that's kind of how our stand-ups look like when crypto is pumping like crazy. So yeah, that was the last 24 hours.
I'm not going to do that next Monday only when I feel 100% confident. Maybe if we really like go into a massive uptrend in a massive bull run, then I feel comfortable in sharing something like this again. Otherwise, I'm just going to pocket this mini win and
take the wins as they come. Yeah. Okay, couple of thoughts. I'm always trying to put some like reason to it, and so okay, let's kind of reflect. So last week we did the update on Tuesday. Fed announcement was after that, so we didn't really know what the Fed announcement yet was. We discussed various possibilities. Otherwise, you can listen to the podcast episode. We published them as a recording on Spotify and so on, so you should be able to listen to those. At the end, it was a 0.25% rate increase. The major thing was not so much that it was expected for the 0.25. I think that was not so much the reason why actually stocks did super well over the past 7 days, had the strongest week since 2020. So like 1.5 years, I think, last week. And also crypto has significantly recovered. I think it's been up almost 10% since then. The main reason, and that's always if you ask yourself, what does the market not want? right? What the market actually doesn't care so much if like news or updates are negative. Markets don't care so much if updates are positive. What they don't want is they don't want uncertainty, and they especially don't want to have surprises into the negative kind of realm. But the Fed actually was quite good in how they came out. They not only kind of came out with the interest rate raise that was the most expected, 0.25. I think it was super expected. They didn't go the aggressive route with 0.5%. I think that would have been a bit surprising. But on top of that, they really clearly signaled that the plan is going to be for the rest of the year to somewhere get to 2% interest rate by the end of the year, right? So somewhere kind of. And they kind of removed a little bit of that uncertainty where people were always gambling left and right. And we're like, okay, where are we going to end up? And so that was, I think, the main statement here, where then suddenly participants were like, okay, actually, fundamentals don't look so bad. We still have like inflation at the moment going on, and this inflation is not going to go away. I want to highlight that, right? So if inflation drops from currently 8%, it drops down to 3%, that doesn't mean prices like go down. It just means prices increase less rapidly. Don't forget that, right? We need deflation in order for prices to go down. So people sit there and they're like, okay, this is still happening. Companies are still doing well. They are still predicting maybe like a bit slower growth than they predicted over the past 2 years, and that's normal, but they're still growing. There will still be massive demand for digital censorship-resistant assets, such as Bitcoin, such as Ethereum, such as DeFi chain, and so on and so on. And so suddenly people were like, man, I have all these dollars on the sidelines. Let me put them to work. And so I think that was the number one reason why the markets really rallied. So it's not so much about actually coming in and doing what's expected. It was even a step further, which was removing that uncertainty. So I think that's really, really important when you talk to larger market participants, larger funds, to people who really kind of manage billions of dollars. I think that was the main statement that at least I heard from some that was really the key thing here, removing that uncertainty. I think that was key. Now that brings me to the last 24 hours. And here, I just always want to caution a bit. So far, we have seen those candles, especially when the price went above 40,000 and then suddenly went through those resistance lines. From a chart analysis, and again, I'm not much of a chart technician. I always call this more astrology than anything else. Whenever we have seen push through there in the past couple of weeks, actually almost months, most of the time, I'm not saying all the time, but most of the time, these pumps got sold off relatively quickly. So be extremely careful. That's all I'm saying here. That you're going in now and you're feeling super bullish right now because you're like, oh, now we're pumping to 42,000, we're getting to 43,000. DeFi chain is at over $4. Ethereum is over $3,000. I get it. Especially, I think DeFi hasn't been above $4 in like quite some time. So, and DeFi has significantly outperformed Bitcoin over the past couple of months. So I mean, it is super strong. But just be aware of one thing. We've seen this now 5, 6, 7 times, where then there was a pump, and then 48 hours later or something, the plug got pulled again, and we saw the dump back down. So the pump got sold off right away, either from the same participants who just keep manipulating the market. And there's a very easy game plan here, right? You build up leveraged long positions. You can do this with call options. You build up leveraged long positions, and then you basically pump the market. You make money on those leveraged long positions. They outperform the other position where you keep buying up the market. And then you build up leveraged short positions, or you go in put options and you do the exact opposite, right? You sell it off again. So you basically your buying and selling position is actually losing money, but you offset that with other positions. In regulated markets, this would be highly illegal. In crypto, this is basically whales just having fun in the water. So just kind of be like, if you don't understand why markets are moving into a certain direction, and I'm not saying that it's completely weird that crypto is doing well right now, and it could easily be that there's a play out there who says, hey, you know what? Makes total sense what the Fed is doing. I'm completely sold on crypto. Let me get in. Let me buy 1 or 2 billion worth of Bitcoin. Makes absolute sense that this is possible. But I also want to say it's also very probable that we see the exact same behavior that we have seen over the past whatever, 2 months, where every pump close to 45,000, and we've had a bit of a trading range of 35 to 45, got sold off. And to me, fundamentally, not much has changed. Yes, we saw a little bit of the uncertainty be removed, but fundamentally, not much has changed yet. We still see the Ukraine geopolitical conflict going on. Yes, we see some peace talks there, and I don't know how much closer we are than a week ago, but there's maybe some small progress there. Yes, the Fed is signaling less of uncertainty, but at the end, we still see the same kind of behavior. So nothing has changed from, let's say, a month ago or 2-3 weeks ago. So I do not understand at the moment why there would be such a price pump that would increase this. So just be extra careful. That doesn't mean I change anything. That doesn't mean that I day trade and I now sell my crypto position. No, not at all. I'm also saying, I mean, there's very good reasons for Bitcoin to start trending higher, for Ethereum to start trending higher, for DeFi chain to start trending higher. Just be careful in these rash movements that you get emotional and you make decisions just based because you feel like you're missing out on something when you don't. So most of the time, it makes sense to dollar cost average in. Most of the time, it makes sense to do this on a very algo kind of basis, less of an emotional basis. And look, I know one of the big advantages people have on our platform is that we're not a trading platform. So people cannot do these super quick movements on purpose, which most of the time actually protects them from bad decision making. So I just wanted to add that here, more from a very left-sided, rational, super dry, not as exciting approach as some others kind of give that to you. But that's really where I'm standing here. So I hope that this pump has legs, and I hope that we can go above 45, because I feel from a resistance level, that has been a major resistance. So people have started to sell aggressively when we got to this 45 kind of level. And I hope we get through there. But for now, I don't have much expectations, which also doesn't mean that I'm sitting here and now I'm starting to sell. Not at all. I'm not touching my crypto holdings. I see this as a long-term position. And for me, it's all about getting cash flow on that. So I actually am totally fine if we have this sideways movement at the moment. I don't know if you see something else out there. I don't know what other reasons people are giving Fabio for those past 24 hours.
Maybe not specifically for the last 24 hours, but of course the core Bitcoin community, they see you have like two camps. One of them, they really feel the regulatory approach is good for Bitcoin, is good for cryptocurrencies, and we see lots of things happening on the regulatory side. So, for example, the European Union rejected the proof of work ban, and now they're going into, I think the two major parties in the European Union, they made a proposal to expand travel rules to every single crypto transaction. I don't know if that's actually possible, but it seems that they want to go that way, so that they are actually able to track things. I guess they want to cash in some taxes, or they want to have a very, close-up approach when it comes to money laundering. Implementation there is key. There are wrong ways to implement this, and I think there are also right ways to implement this. I'm very thankful that I don't need to approach these things, but also in the United States or in other countries around the world, you see that countries are moving into the sector and with not that closed-minded. Most countries and most regions are actually open-minded to the things that are happening. And you can see everywhere on Earth, like, I don't know, I think several states in the United States are looking into a legal tender issue. You have Lugano in Switzerland, you have Tonga, you have, of course, El Salvador. I think some other South American countries, they're experimenting and putting forward proposals for, I don't know, when in the direction of nation-state adoption, or at least I think also Ukraine practically just legalized Bitcoin. So there's lots of interesting things happening that I guess take a lot of time and accumulate, but to just put something to this pump from the last 24 hours, I find that extremely difficult always, because there is so many things happening worldwide, and there are so many bigger players coming into the space. So the price action that you just mentioned, these pumps that get sold off pretty fast, it changes because other players, a lot smarter investors, a lot bigger investors, a lot more capital is in the space right now. And I think it's the same thing, the bull market we saw in 2021 and the price range we are in right now. For me, it's kind of logical that we don't have these blow-off tops, or that we didn't get a blow-off top, because there's just so many smart players, like traditional funds, hedge funds, and if they make a 5x, if they make a 10x, they will take profits, because for them, this is an absolute game changer. And I guess this changes the game a little bit. I think you made the argument a year ago that the 4-year cycle is over. Maybe you have some thoughts on that.
I mean, to me, the 4-year cycle, I always, I mean, the question there is how much is just a random coincidence and how much is actually a 4-year cycle. If I look at what people call the very first cycle, which was the cycle that I kind of got in, this cycle got ended by Mt. Gox, right? And so I don't know how much that was just coincidence. And then the second cycle was simply because of that ICO hype in 2017 that then just deflated kind of the entire market. And so right now, I mean, I would say that the entire kind of top was because of the Fed signaling that it's gonna just reduce the easiness of the money policy. And I'm not sure how much that had to do with a 4-year Bitcoin cycle. So I've just always been a bit on the cautious side when people talk about a 4-year cycle. Now, of course, supply and demand, like I think it's very tricky to define the demand kind of function in Bitcoin. But obviously you have a little bit of that supply, just a little bit, because new Bitcoins obviously get issued and like every block, but then this gets halved every 4 years. So there is a little bit to that function. But as a whole, I mean, I don't want to say that I don't believe in the 4-year cycles, but to me, this is just, I always just question, is this not just a bit more randomness than, and people just try to see a signal when there's actually no signal. And I'm still super skeptical right now. And I'm super skeptical in, are we going to see purely a repetition of, is this just a dip right now and we're going to see this massive recovery, so what people call like the lengthening of a cycle? Or are we going to see, well, maybe this is like a 2018, 2019 kind of, should we see a 1.5 years of crypto winter? Or do we see, I don't know, more of a 1920s, 1970s kind of a repetition where we see a 10-year winter, right? I think at the moment there's literally anything on the table. And I don't think it has much to do specifically with Bitcoin. I think it has way more to do with what's happening geopolitically. I think it has way more to do with what the Fed is doing right now. And I think that's way more relevant. Don't forget, if we look at the main use case for Bitcoin, at least what I think is the main use case for Bitcoin, and we can, and I think that also explains a bit on why Ethereum has done better than Bitcoin over the past 12 months, and why DeFi chain has done even better over the past 12 months. And we can kind of really drill this down a bit. So Bitcoin's main use case for me is that of digital censorship resistant something. And so you call it an asset or whatever, but it's something that's digital and something that's censorship resistant. That means you, unless you really use kind of like extensive force or violence, you cannot take the Bitcoins away from someone, and you cannot keep someone from receiving Bitcoins, right? So that's censorship, censorship resistance. So the main issue is, yes, I understand that is the main use case, but how many people do you think actually buy Bitcoins for that specific reason? And I tell you, I actually believe it's probably less than 1%, and we can have an argument on that, but I think it's a super tiny amount of people who really buy it for that reason. Now, you can have a different use case. You can say, oh no, it's a digital payment, cross-border, in order to like bypass any kind of fees or any kind of remittance that way. Fair enough. I am not disagreeing with you that it has that use case. Again, how many dollars do you think are in Bitcoin for that specific use case? And I, again, believe it's in super tiny percentages. So the majority of dollars that are in Bitcoin are specifically in there for speculation. And I think that makes a lot of sense, because I also assume most people on this call, they buy Bitcoin at 42,000, and all they care about is for Bitcoin to get, I don't know, go to 100,000, right? That has actually zero to do with the actual use case. So it's purely a pure speculation. There's nothing wrong with it. I just want to kind of explain where does the real price movement come from. So when people talk about, oh, now we have this geopolitical tension in the Ukraine. Oh, we have this censorship coming up in Canada. Oh, we have countries all around the world like implementing new laws, and people want to bypass them by digital censorship-resistant assets like Bitcoin. I'm really not sure if that is such a relevant price driver in comparison to pure speculation. And pure speculation comes from, especially if it is a risk on asset, comes from having obviously free cash aside, cash that you are okay with to speculate with and maybe gamble a little with. It comes from, and that's where inflation comes in. It's inflation not eating up your income because these expenses are rising. I mean, people paying more for fuel than in a long time. Food is going up. Rent is trending up in a lot of places, right? So you see this money printing catching up with a lot of people. So there is this massive kind of fear that these forces are working against what the real use case of Bitcoin is probably going to be. And so that is also why Bitcoin has been shown to act way more as a risk on asset than a risk off asset. Now, over long periods of time, this is very likely, I also believe that, very likely to change, right? So I think that's a very important key to understand here. Now, if you compare this to Ethereum, right? Ethereum has way less, at least in my kind of point of view, on this idea of being this digital censorship resistant something. First of all, I don't think Ethereum is as censorship resistant as Bitcoin. It's not as decentralized as Bitcoin. I think it's the second most decentralized protocol, but it's not as decentralized, right? I think it's not as sound from a regulatory standpoint. I think it's not as sound from a governance standpoint and from a technical standpoint. But that, I also don't think it has to. I think it has totally different use cases. That's at least my kind of point of view. It is this decentralized sandbox, this decentralized platform that can run so many other kind of applications or ideas on top of it. And obviously with that, we see massive use of ETH. And with that, we see some of the burn. And that has shown, especially the last 12 months, to just be a super strong price force to the upside. And that's why, for example, if you compare like over a 12 months time period, Bitcoin is massively down over the last 12 months and Ethereum is massively up. And there's absolutely nothing wrong with that. It's just, it really explains it, because I think Ethereum has way less of, oh, I need to buy ETH because I need to use this censorship resistant application that no one can stop. Sure, some people really see it this way, but I actually think that the majority of people don't see it that way. I think the majority of people see it, oh, there's memes on there. I have meme coins on there. I have NFTs on there. I have GameFi on there. I have DAO opportunities on there. And so I think that's where just a lot of the forces are coming from at the moment. And then obviously you take this next layer further and you go, for example, to DeFi chain, not as large as Ethereum, definitely not as decentralized yet as Ethereum, and not as widely known as Ethereum, right? Absolutely accepted. But then you look at the specific use cases there. The use cases are, especially if you look at over the last, let's say, 3 months, right? Decentralized assets, decentralized tokens. This is a completely like new ecosystem that caused massive burn for DeFi, a lot of buying pressure for DeFi. And if that hard fork goes through as planned beginning of April, I think the goal right now is April 7th, I think, or something. If that goes through, then I expect another massive burn, a massive push for the price. Yeah, this doesn't mean that this will happen. I'm just saying, if everything goes through as planned, this should be expected, because there should be a lot of DeFi being bought up and burned. And that's also why you actually see DeFi constantly outperforming ETH and Bitcoin over the past year, over the past couple of months. And so this explains this really well. And so I just want to be clear here, when people come in and they have these expectations based on pure fundamentals, it's sometimes quite tricky to explain pure fundamentals from censorship-resistant gold or a censorship-resistant digital asset, as Bitcoin is, and kind of go and look at these geopolitical events and say, oh, you have these Ukraine conflicts, oh, that must be super bullish for Bitcoin. It is for a super tiny group of people that are affected there. And again, I'm not saying this is like a few people, like millions of people are affected. But if you compare this to all the Bitcoin holders, majority of Bitcoin holders are not affected by that. And so I just want to be clear here on why prices are doing what they're doing. And so sometimes it can be very tricky. Like it's very easy to fool someone, and the easiest person to fool is yourself, right? So if you as an investor fool yourself constantly by believing in a certain narrative and you don't double check that, it may be a bit dangerous sometimes to put your purchasing power into certain assets. So that's just what I see here, and that's why I'm a bit more cautious on those 4-year cycles. Yeah, a bit of a longer rent here. Yeah, I don't know, Fabio, if you had anything to add here.
Yeah, for me, it's a little bit of a special period in time because I think you're 100% spot on with the analysis that a large people participating in the crypto market are seeing this as a speculative play. What I would add to that is I think this is at least within the last few years, this is true for almost anything. Because people like there is this underlying feeling that practically our savings are getting printed away. You have increasing inflation numbers around the world, and of course the crypto community and the people here in these Twitter spaces and on crypto Twitter, they are aware that inflation is happening long before the majority of people were. But within the last few months or within the last year, consumer prices started to change. Like a lot of assets are starting to change, and gas is increasing in price, and so on. So people are really looking into houses, stocks, bonds, into all kinds of different assets to practically take the risk off. Yeah, so everything is treated as a speculation lately. It doesn't matter if it's houses or stocks or crypto.
Yeah. I think one of the most dangerous scenario that we have, in my opinion, and it's still the most likely scenario we're actually going to see over the next couple of years, right? And I'm talking years here. So I'm not talking weeks or months. I'm really talking years. Is that dangerous mix of financial assets on a broader scale constantly being pressed down because the majority of people don't have excess cash to invest in, because all they have to try to do is actually survive because inflation is eating up everything. So they really struggle with that. A lot of the wealthy people that would easily be able to afford that are on the sidelines, a bit cautious in not daring to invest because they kind of say, oh, assets are not really going up because most people don't have money to invest, so I'm not going to invest. So I would rather stay on the sidelines. And then at the same time, actually, a lot of the expenses keep rising because of that money printing that was done over the past 2 years. And that money printing is now actually moving into the economy, because a lot of people that made tons of money are like on the sidelines and they start spending. And by that spending, obviously demand goes up, and that way prices over time go up. Then we have the supply chain issues. We see massive issues right now with that globalization. If you think about it, right? If you think about a lot of the like supply chain issues that pop up right now, and I'm definitely in no way a supply chain like expert, by no means. I have a digital company basically with Cake. Our supply chain is the internet. It's AWS, or it's hostings. It's all the servers that are out there that we have for our company, right? So completely different than having physical goods being shipped around. But you see this left and right. And suddenly, like just speaking about energy, right? You look at the entire energy issues that we see in the world right now. They get exposed simply by the geopolitical events that we're seeing around the Ukraine. And that simple thing there, which is, I mean, we're not talking about a global world war. We're talking about like Russia, Ukraine, neighboring countries, and we're talking about a West. And the West is still united. So, I mean, Europe is super friendly with the US. The US is super friendly with most other countries. The US even starts being super friendly now to countries it used to do sanctions with in the past. And now suddenly it's kind of opening up. But there we see these massive interconnections just of the energy flows. And so that just shows a lot of, in my opinion, like changes in thinking that CEOs and companies are going to have and for the next couple of years, because they're like, look at all this stuff we're in right now because of these geopolitical events. Just imagine these geopolitical events start spreading. Just imagine this starts affecting Taiwan. Just imagine this actually goes into NATO countries. Just imagine, right? What's going to happen then? And so CEOs and a lot of like risk officers in many companies, they're going to throw the towel and they're going to come in and they're like, okay, either we source stuff differently, we don't globalize as much anymore, we localize way more. And that's going to cause completely different productivity issues over the next couple of years. And you come into this really weird, and to me, that's a very tricky place to navigate from a financial standpoint. I'm going to give you my ideas how I'm going to navigate this, but this is definitely not financial advice. I want to be very clear here because I'm not sure many people really understand how to navigate this. I would probably say no one knows. I was in a very small group setup with Morgan Housel, Psychology of Money. I think most of you know that. And he had some really great talking points in this super small, like private setup. And one of the talking points he had, and that really stuck with me, was how literally any investor over the past 2 years was seriously wrong on a certain point. And that was such an eye-opener to me because he was so right. Like, I was so right in going all in into tech and Bitcoin and Ethereum and DeFi chain over the past 2 years. But then I look over the past, like, let's say 6 months, I would have never expected or predicted the commodity uptick. I would have never predicted that like the right place to be would be energy company, especially oil companies, right? I mean, if you would have asked me 6 months ago if like traditional oil companies or oil would be the place to be, I'd be like, never, ever. I mean, I don't see this at all, right? So I think there would be constantly like, let's be real here. Anyone that was in Bitcoin over the past year, I mean, would have had a better choice if they had been in the dollar over the past year, right? So just like put the facts down here. Everyone who was in Ethereum or DeFi chain is winning right now because it's up in the dollar, but Bitcoin is down. That doesn't mean that Bitcoin was a bad investment. It shows how difficult over the past 2 years it was to navigate this entire chaos of COVID, money printing, supply chain issues, geopolitical issues, and so on. And I think it was a really, really kind of eye opener for me when I heard that. And so going forward, I think it's going to be really, really tricky. You have these rising prices. Then you'd be like, okay, you know what? Let me invest into companies that actually work with those commodities. Well, maybe these companies really struggle because they need to actually, their profitability actually is going down because they need to change their supply chains, right? They need to work around this. They need to change a lot of these setups and strategies. And so suddenly their profitability goes down. And so their PE is going down. And it's quite tricky to go into that space. Then you're like, okay, you know what? Let me go into the crypto space. Well, crypto in general is a bit more risk on. So people have less cash on the sidelines. Retail is going to be struggling. So you sit there and you're like, oh my goodness, like crypto is not moving much. Yeah, it may go down 10%, it goes down 10%, but it's lacking that. Okay, so you go into bonds. Well, bonds are what, 2% on the 10-year, inflation's at 8%. So unless like you have this massive liquidity still into bonds, like you're losing 6% per year over the next 10 years guaranteed. So this just is a really, really, really weird kind of setup that you're in, right? And so obviously then you're asking and you're like, okay, so what am I going to do with my money? Am I going to just stay in dollars? Well, if you just stay in dollars, you don't have any pricing power fluctuation against the dollar, but you know that over time, you're definitely losing purchasing power because inflation is there and we see prices going up and we don't expect these prices to stop going up. So you sit there and you're like, it's a really chaotic scenario. So here is what I would be doing. What I would be doing, and I mean, that's what I am doing, is first of all, I diversify. I go into stocks, I go into bonds, I go into cash, I go into crypto. Now comes the next part. You want to get cash flow on these assets all the time. I guarantee you one thing, over the next couple of years, cash flow will be king. Why will it be king? because in inflationary times when interest rates go up, cash flow is always king. Non-cash flowing assets always have a harder time when there's inflation and when interest rates go up. This is like as given as it is. That's also why I would be a bit careful right now if you have a really high exposure into commodities. Again, I have zero financial advice here. This is just me personally, maybe reshuffling a little bit of my allocation out of commodities. If you look at historical kind of returns that commodities do, oil and so on, it may just make sense to kind of reallocate a bit. It's the same thing as when I sold a lot of my Bitcoins in October. I didn't sell them because I thought Bitcoin was going to go down. I didn't know Bitcoin was going to go down. Otherwise, I would have sold it all. I mean, this is common sense. It's just because my Bitcoin position was so outperforming the rest of my portfolio that I was like, you know what? Let me rebalance a little bit into the underperforming assets. And it's maybe the same, a good time to reflect on your commodity position. If your commodity position is super tiny, I think it's nothing to like worry about. But if your commodity position is now suddenly, I don't know, 20, 25% of your portfolio, which is definitely possible. I mean, this thing went up 100% over the past year, right? So just kind of keep these things a bit in mind. And then diversify and look for cash flow. It's absolutely essential. I think one of the key things why our company is going to do so well over the next couple of years is because we actually take non-cash flowing assets like Bitcoin, like ETH, and we can, I mean, ETH to a certain extent is cash flowing, but still limited. But we take these non-cash flowing assets and we really provide cash flow. And we see this. I mean, I see this when I was in the US. I traveled, I talked to some really, really like influential, wealthy people who all like obviously looking at what we're doing. They're like, okay, how does this work? How safe is this? And so I told them, I said, look, you can see it, everything is step by step. And they're like, wow, this is going to be so powerful going forward. Because sure, you have exchanges where people can trade left and right, but we all know with trading, it's pure gambling. But if then suddenly you have this consistent, transparent, easy cash flow, that is super, super powerful. And I'm not making this pitch now because I'm the CEO of the company. I am making this pitch because I truly believe this from the bottom of my heart, that cash flow is going to be extraordinarily important over the next couple of years, simply because of the economic kind of setup that we're going into. So sure, I say this proudly because I am the CEO of the company. At the same time, I think in all these Twitter spaces, I've always said when I think something is not going well and something is going well, I just really always kind of just put my heart out in how I feel about certain things. And I just also think that maybe the next couple of years are going to be a bit harder than the past couple of years, simply because we need to do some decompression in the economic environment.
Yeah, sometimes I think you summed up the whole approach with like being cash flow heavy and diversifying, not being wrong, trying not to be wrong. And the thing that we have like pole position in something that never happened before. Like we are living in so exciting times. Yesterday, I think the vice president of the European Union, I'm gonna butcher that name, Louis Goudon. He practically made a statement. It doesn't matter what kind of scenario comes up, the European economy will not go into a recession. And some similar statements were made a year ago or 2 years ago by the Fed, where they practically said their ability to print money is unlimited, and that they will not let the economy slip into a recession. And on the one hand, I truly believe them because they have the capabilities to ramp up the money printer and just go nuts. On the other hand, there is a voice in me when I read things like that. I practically want to sell, and I expect a recession tomorrow because I don't believe a single word. When a vice president says it's impossible for us to go into a recession, there's a voice in me telling me the recession is coming right now. So it's super hard, and also things like that, they actually never happened before. And on crypto Twitter, especially within the larger Bitcoin community, people they think that government officials or nation states or these entities like the IMF or they have bad intentions. I don't think that is true at all. They don't have bad intentions. They actually want to make things better and look out for everybody. It's just that we don't know what the consequences of our actions are. that what 40 years of quantitative easing does to the markets. So we have these crazy things like these supply chain issues, or that energy costs are skyrocketing. And I think the US, they will distribute money to everybody that earns less than 300K for energy costs and fuel costs. The same is happening here in the Netherlands, where I'm based. So we have all these new things that follow up this heavy COVID spending period. And lots of people actually compare the period that we have with COVID to war spending times. Like a few governments, they ramped up their spending as if there is a war, and there practically was a war against COVID, a pandemic war instead of a real physical war. But of course, these things have consequences down the line, and it's so hard to anticipate what is happening. And in hindsight, it's super easy, because you look back and you think, oh, now it was super logical that this is going to happen. But if you go back a year, I think there was an incident where oil prices almost went negative. And like, if you would have known what's happening in the course of a year, that oil prices and commodity prices are going to skyrocket, everybody would be a millionaire right now. In hindsight, it's so logical, but when it's happening, it doesn't feel that way. For me, at least, it is very hard to navigate this space, and to really allocate my money to feel 100% comfortable. And I guess this is true for almost everybody. But the cash flow definitely helps.
Spot on. No, spot on. So I think we talked enough about the general environment right now. I would love to talk about two things that are happening at Cake DeFi. Is there anything that I'm missing? Any kind of question that you see out there that we need to answer up front? I want to talk about KYC, and I want to talk about a promotion that's starting, or probably starting tomorrow. So I don't know if other than that, you see anything that we need to cover or mention?
Maybe one small thing I wanted to mention. There was this wild referral hunt going on this morning, because we made a slight update, and there was a display issue where we displayed that the sign-up bonus changed from $30 to $40. But this was just a display issue where our algorithm in the back end kind of added the $10 that you get for referring somebody, and the $30 that the referee gets. They were added together. So this issue is already fixed, but there is no specific code that you can use to actually claim this bonus. The bonus is still $30 as it was last week. That's maybe
this was a display issue. We caught that. A lot of people tagged us on this. Sorry about the confusion. Okay, cool. Two things. So first of all, I think many of you have noticed, especially if you haven't been accustomed with us, many of you have noticed that we have integrated an easier KYC flow. This was quite some work. Again, we worked the entire first quarter on this. So it works a lot easier. It works a lot smoother. So if you have been having issues with KYC in the past, please retry. Now, of course, just how launches are, on the very first day when they use launch, it works for like half an hour, and then something doesn't go out right, and it shoots the entire system. So we had that. So we actually couldn't do KYC for a couple of hours, and had to understand what was the issue and fix it. It always reminds me always of this testing stuff, when like people go into that bar and you basically try to test, and they order a beer and it works, and then they order wine, it works. They order whiskey, it works. And then you're like, oh, quality assurance. Oh, it's all fine. Like, we tested all the possible like ordering scenarios, and it all works. And then the first person walks into the bar and says, oh, where's the toilet, please? And bam, the entire bar blows up. So it's kind of, it always reminds me a bit of that when we're testing, and then like, oh yeah, everything got tested. I'm like, really? Like, everything was tested? Oh yeah, for sure. And then like there's this one weird edge case, and that just stalls the entire thing. And then when we look at it, like, okay, no one in their right mind could have tested that, because there's such a weird edge case that always kills those things. So, but other than that, I think this should be back up smoothly. I think as we are speaking, it should be back up. And so now if you are doing the KYC flow, you should have way faster response. And with way faster, I'm really talking sometimes in minutes. other than that, normally we had our KYC approved normally within a day, but now it's like super, super quick. We are like, I think the flow, the user experience is like probably 10 times better now. It should be a super smooth, easy, amazing process. I don't know if you have seen any feedback already on it, Fabio, but from anything that I have seen, tested myself, this was like, oh my goodness, this is like 5 times better to like what we had before.
It is amazing. The customer experience in general will change a lot for the whole sign-up process. We are really having an eye on that. For everybody that already ran through our sign-up process knows that we are really doing our due diligence. It is a lot harder to, or it was a lot harder to pass Cake's KYC compared to other players in the industry. And this has to do with many things, that we really take regulation in Singapore very seriously, and that we try to go the extra mile. And that we really, if there is a small mistake, if there is data that is not 100% correct, we will reject the case. We want to be 100% certain that everything is done correctly. And so this was also the reason why we took our time with finding an automated system that could really fulfill our needs. And right now, at least from the few cases that were already reported or mentioned in the community, everybody seems to be very happy. There was a small period of time where the system had some slight hiccups. I think right now everything is working very smoothly. So as Julian said, if you haven't done your KYC, or if you did try and you got rejected, or the process was just too complicated, please try again. It is like the system that you encounter with most of the larger players, where you practically just scan your ID, and within a few minutes you get feedback on how your application is going, if it's rejected or if it is verified. And I personally think this is a big step for us, and we are consistently going to improve this process, not only the KYC part, but also the regular sign-up part. There is lots of attention going into this, so there's so many things happened in Q1 that is difficult to see from the outside, but all processes, especially when it comes to sign up, they will be so much smoother within the next few weeks.
Yeah, as we mentioned, Q1 was really more of a cleanup. So we didn't, there's still one product that we want to launch. I'm not sure if it's going to get launched within Q1, but then if not, then within the beginning of Q2, which is obviously decentralized loans, basically taking out dollars versus your crypto. That is also, there's also a product that the team's working on that's planning on launching. But other than that, we didn't really intend on launching many kind of new services or products, because we really want to clean up. We're doing a lot of backend work, and also kind of revamping for the signups, KYC flows, because that is a key step. So if you're not a customer yet, then it's about time. If not now, really, then when? By the way, I was just tweeted at that DeFi is over $4, Bitcoin is over $43,000, and Ethereum is over $3,000. So I didn't check, but I don't think someone is lying to me here. Yeah, so respect the pump. Yeah, and with that being said, if everything goes according to plan, then please watch out for a cool promo we are launching tomorrow. It's gonna be like, you need to be fast, I tell you already, right? So you definitely gonna want to like be on your keyboard. We're gonna make announcements, so don't worry. But you wanna keep us on speed dial. And it's gonna be, if everything goes as planned, it should be launching tomorrow, and it's gonna be applicable to new customers, existing customers, but you wanna do your KYC and you really wanna get going with that. So you're gonna love that. It's gonna be a like last time we did something similar. It hit really like big time. People were super excited, and so I hope everything goes as planned. It depends on obviously if we encounter any other issues with the KYC flow, then we add additional strain to the system, and everything should go smoothly. But at the moment, I'm quite confident. I don't want to give away too many details, so just like keep us on speed dial tomorrow. Then we're gonna be on social, Telegram. I mean, that's a good place also, right? If you're not in our Telegram group, or you're not if you're not following us on Twitter, then hey, you deserve to miss out on these things, right? you want to be on top of the game there. So you want to have a slice of the cake. Well, you got to sit at the table. So yeah, that's kind of the game plan. Don't want to give away too much here. So just stay tuned. Yeah, quite excited for that. Fabio, anything else I'm missing?
Yeah, probably the best place to follow us. I hope so that you're following us on Twitter because you're in this Twitter space. If you're listening to this on YouTube, Apple Podcast, or Spotify, you should definitely give us a follow on Twitter. If you don't use Twitter, we have a Telegram announcement chat. I linked this chat in this Twitter space. So right above, you can just click there and you will be directed to the right place. This is a very clean way of following important announcements. If you're not on Twitter, definitely use the Telegram announcement chat to stay up to date, especially if we launch new promotions. And some of them, as Julian said, they are limited in quantity or limited for a week or for a day only. So it helps definitely. And just for everybody listening in, we're doing this on a weekly basis. And as mentioned before, this is shared on YouTube and several different podcast platforms. Please tune in on a regular basis and follow us on Twitter to be up to date for future promotions and stuff like that.
Awesome. Not much else to add here. Have a great week. Stay safe, stay healthy, and yeah, consider joining us. Thanks so much, Fabio. Thanks so much for your insights. Thanks for taking out an hour of your day. Love you all. All the best. Talk to you next week. Thank you, and bye-bye.